joined by FDC's analyst Tomiwa Ajewale. It's good to have you on the show, Tomiwa. Let's talk about what's happening in cocoa. Tomiwa, are you there?
Yeah, good afternoon. Thank you for having me.
It's great to have you on the show. Tomiwa, cocoa, we see, is one of Nigeria's major non-oil export earners. We see generating over $300 million just in the second quarter, just in revenue for the country. But we saw also there was a price surge in cocoa by 127% in 2024, and we saw that average in price about over $7,000, $7,300. But right now, there's been a 52% drop in 2025, and we're down to about $5,700 per ton for cocoa. Now, if this downtrend, if it does persist, how do you see, how far lower do you see the price of cocoa falling to?
Yeah, so as you rightly said, in 2024, global cocoa prices skyrocketed to, record highs, about reaching almost $12,000 per ton. And this was mainly because of supply constraints. Then we were, global economy was struggling with the weather disruption, and so that impacted Ivory Coast, Ghana, and total supply actually fell about 13%. But now in 2025, we are seeing that production is increasing. The yearly forecast about 7% increase this year, another 7% increase next year. So because of that, prices are falling. It's currently about $5,000 per ton, and we expect prices to continue to come down. Although prices are going to continue to come down, we don't expect it to reach about $2,000 per ton, 3,000, which has been the record prices that have been in the last 10 years. So, even though prices are falling down, we still expect it to be a little bit higher than the historical average. For Nigeria, while lower cocoa prices is not good, since cocoa is our major non-oil export earner, the fact is still that cocoa exports is just about 2% of our total export earnings. So we don't really expect it to have that much impact on our export earnings or our external balances. But there's a key risk because oil and gas accounts for about 80 to 90% of our export earning. And in 2026, the forecast are the oil price to average around $55 per barrel, which is lower than the current $62 per barrel. Also, by the time the CBN starts, reusing interest rates in 2026, there's a risk of capital flight. So by the time you take these two or three factors, which includes the lower cocoa prices, there's a little bit of risk on our external balances and export earnings. So there's which could put pressure on the naira if all of that happens. So those are key risks that we have to look at.
Okay, but you said something now. You said it's just 2% of our export revenue, and it's not a lot, but the country doesn't depend on it for its revenue generation. But we have states in Nigeria that are leading cocoa producing states. If this price continues to drop, what would it do for their internally generated revenue and also their fiscal planning in terms of their budgeting and all that?
Yeah, so I mean, if you look, we're looking at Nigeria, we're looking at states like Oyo, Ondo, Ogun. These are states where cocoa is a major source of revenue for them, and with these lower prices, that means that their revenue is going to fall. If you look at their internally generated revenue in 2024, when prices were up, their revenue increased an average around 30%. So, with the lower prices, their revenue is going to fall, and that's also going to impact their spending. But we expect to see differences in states like Oyo, where cocoa is not necessarily the major focal point. The impact on revenues may be limited. But when you look at states like Ondo, where cocoa is, is very, very important in their revenue, that state now has to be very careful because, you may have to put a pause on some capital spendings that you plan to before. And even if you're not looking at your cash flows well, now that the export earnings or revenue are going to be falling, you might have a little bit struggle if you're not prepared well for your recurrent expenditure. So, and also when revenue is falling, this increases the fiscal deficits of the states. And apart from even the government, even the farmers themselves, we are going to be seeing lower income for them now that prices are falling. So yes, there's a key risk in that sense, but it's important for us to move just from selling raw cocoa to move to higher value chain. That we'll be able to get more foreign exchange and still boost the earnings and revenue.
Okay, but just very quickly, where are we at in when we talk about the forward integration in the cocoa value chain? We've seen this price drop now. Is it going to still be economically viable to pursue this pattern of production or a way forward in Nigeria's cocoa industry?
Yeah, so ideally with prices now falling, that reduces the incentive for people to move into the sector because with prices falling, the margins are going to fall. But when you look at the Nigerian economy as a whole, and when we're not looking at the short term but long term, we still have to move forward in the value chain. It's still definitely economic variable. By the time we stop exporting just raw cocoa and we are processing it, that way we're generating more export earnings. Two, which is key is that we are creating jobs in the manufacturing sector, which is important to for employment and also to increase revenue. So yes, it's still economic viable, but regardless of that, to put that into process, we still need to pay attention to the fact that such industries require good power, they require good logistics, they require good market integration. We need an organized primary these cocoa farmers organized so that we can have quality and constant supply of cocoa seeds so that way the manufacturing industry will be able to be viable and to operate efficiently, and that way we can increase our export earnings while also creating jobs and opportunity, and most importantly diversify the economy away from oil and gas.
Thank you, Tomiwa. We'll look forward to that. Tomiwa Ajewole is analyst with FTC. Thank you for joining us on Business Incorporated.
Thank you.